morning about mortgage and student loan interest deduction. And this is from the point of view that you will not hear. If you are a non-American, you will probably understand this better. For whatever reason, most Americans cannot understand this. This is a conversation. In fact, I have a funny real estate story with, a story with a real estate agent when I was working at the bank. There's a lot of bad about the mortgage interest and the student loan interest deduction. In fact, the mortgage interest deduction is one of the things that contributed to the housing bubble, and is one of the things that has contributed to the housing bubble blowing back up, and it is definitely contributing to the student loan education bubble. And I'll get into why that is. But if you're a Russian or you're a Chinese individual and you want to go into politics and you want to help run your country, this is something to avoid. In fact, pass a law that prevents ever having deductions based on interest payments. And the reason for that, or tax deductions, as we'll see in a second, is very, very destructive, and I'll show you a few points. First of all, home ownership can be very destructive to an economy when it faces migration problems and area-based labor shortages. This is what happened to the United States in 2008-2009. About 3 years ago, I was speaking to a group of financial individuals, and I was pointing out to them that the media lied in 2008-2009 about this huge, there was a housing collapse. That was actually not true. There was a housing collapse in certain areas, number one. In fact, for instance, like, Nebraska didn't have a major problem, neither did Tennessee, relative to like Phoenix, right? It was an area-based problem. Likewise, jobs, people who were getting laid off were not getting laid off in every single area. There were a lot of places in the Midwest that were desperate for people. I'll give you a case in point. Midland, Texas had an unemployment rate of around 2%. And they were desperate to get people there. Of course, they also have a housing problem because they don't have enough houses for the people that live there, right? So the lie that the media kept going on and on was that there was this high unemployment rate, but that wasn't actually true. There was a high unemployment rate in certain areas. Now, what would happen if fewer people were homeowners? Well, they would be able to just move to where the jobs are, right? But the problem is, if you have homeowners, what do you think they do? They start, well, I can't pack up my home and leave. Well, why can't you move? Well, my kids have friends here. That's not an actual value, right? In other words, who cares? Like, if you don't have a job, your kids aren't going to be able to eat, right? But it's this American thing, and again, Americans they'll start saying all this stuff that makes no sense. Like, well, but I can't move because of my children, or I can't move because of my spouse, or all this stuff. And it's like, look, if you're not able to put food on the table, then you got to move to where you can put food on the table, and that's all there is to it. If people were renters, or the majority of people, I should say, were renters and not homeowners, there wouldn't have been a problem. They could have been just packed up and left. Home ownership leads to people, like I said here, staying put, trying to make it work, even if no jobs exist or going to exist. Here's the reason why this is a big problem. What it does is the unemployment rate ticks up. What do you think central banks do? We need to lower interest rates. Why do you need to lower interest rates? Because there's a high unemployment. But there's all kinds of jobs in the Midwest and other areas. Well, but, what about the people on the coast? Well, maybe there aren't real jobs in those areas anymore. Maybe the economy is shifting more to the Midwest, which is what's happening, by the way, in the U.S. I predicted this, about 3 years ago, to these financial people. I was like, look, the Midwest is going to become more of the powerful, the rich part of America. The coast are going to increasingly become poor. It's just what's going to happen. Because the reason why is the Midwest has jobs that are sustainable and that are needed, whereas the coast, not as much anymore, right? What happens is this creates an unsustainable mess in the long run. So all the jobs that people are getting on the coast aren't going to be sustainable in the long run. It's going to be predominantly the Midwest, okay? However, this is completely unmentioned in the media, okay? Basically, the mortgage tax deduction interest creates neighborhood bubbles. And not neighborhood as in, oh, this neighborhood, but just you have these little area bubbles. Like Phoenix, when its housing prices fell that much, that tells me that Phoenix, there's way too many people that live there. There's not very many sustainable jobs there. You need to have those people start migrating. Problem is, home ownership, significant problem. You can see this, by the way, in areas that had housing prices collapse. Yeah, what you really had going on there was those jobs in those areas are not sustainable, so people's income took a hit. Then they become unemployed, and what happened, right? Okay. So again, if you're a Russian individual, a Chinese individual, probably this is blocked in China, but whatever, or a country or a young person wanting to learn what type of laws to prevent, why America ever allowed this was just dumb, 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 and it has caused significant consequences to our country because again, you now have a lot of jobs in areas that again are not sustainable. Okay, this would not have happened. People would have had to start migrating. And part of it, yes, I agree with the Federal Reserve lowering interest rates and QE and stuff. Okay, so other consequences to the mortgage interest and the student loan interest deduction. And by the way, it's the same type of lessons you can apply to student loans. First of all, it rationalizes borrowing. Most Americans are clueless when it comes to math. Okay, if you pay $10,000 in interest and have let's say $4,000, let's say just hypothetically it was a 40% deduction, $4,000 of it's deducted from your taxes, you still paid $6,000, and that is not better than paying $0 in interest. And I know if you're a foreigner, especially if you're not a foreigner, but if you're a non-American, you're like, well, duh. Well, hold on a second. I mean, Americans don't actually understand this. You would not believe how many of them I've debated on this, and they're like, no, you actually make more money back because you get to deduct it off your taxes. Paying $0 in interest is always better than paying $10,000 and getting $4,000 back. And they'll actually argue with me and like, no, because you get $4,000 back in the other, but you still paid $6,000 to the bank. I don't know why they can't figure this one out, but they don't get it. When I was at the bank, I talked to a real estate agent, and she was like, oh yeah, home ownership is so great, rah, 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 kind of like the cheerleader for real estate. And I was pointing out that she mentioned the mortgage interest deduction, and she was like, oh, see, it's not that expensive to own a home. And I'm like, look, if you look at an APR of, let's say 5.5%, the after-tax APR, if you apply and you actually qualify for the mortgage interest, is still about 4.1-ish%, maybe a little bit more than that. You're still paying interest to the bank. You're not getting all of the interest back. She just couldn't get it. She was trying to claim that if I bought a home in cash and paid $0 in interest, that was worse than borrowing money and paying $6,000 a year to the bank. I'm like, you can't reason with an idiot. This is proof. They don't understand math. Oh no, I'm still paying $6,000 to the bank and getting $4,000 back in time. Anyway, and that's what I mean. It's contributed to a debt-based culture. Debt is good. It's wonderful in America. Okay. It makes something which is high risk feel like low risk. Buying a home is a very high risk move. You don't know if your job is always going to be around. I still think it's absurd too in America. They allow people to put like 0% down or 10% down. I'd require 50% down. I said, well, people would never buy homes. Well, that's the point. It would be the only way that buying a home could be a lower risk, it'd still be moderate risk, would be if you put 50% down. Right? This whole idea, 20% down. You're still betting on the fact that you're going to end up earning enough income to pay off that home. How do you know? You may have a good year this year. You don't know if you're going to have a good year next year. And by the way, before anyone sits there and acts like this is some new concept, if you read The Prince by Machiavelli, he talks about how fortune constantly changes, right? You may have it with you today, but it'll go tomorrow. What about in the book of Genesis? Joseph tells Pharaoh, prepare in the 7 years of famine. Prepare in the 7 years of plenty for the 7 years of famine. The book of Genesis is like 3,000 years old. I mean, these are things that have been around. Juvenal in the 16 Satires talks about, saving money. Is like, don't go around buying, salmon on an income only suited to catfish and preparing for the future. I mean, these things have been around for a long time, so it's not like we suddenly realized that we could have bad years. Humans have been having good and bad years for a long time. There's a point when you put money down on a home, you're still betting on the fact that you're going to earn some back, unless you're paying for it in cash. Now, I think that's a good thing, right? You pay for it in cash. Even if you lose your job, you can always sell the home. And even if you take a loss, it may not hurt as bad as someone who's in debt up to their ears. And by the way, that was the other thing too about, and who ended up subsidizing a lot of these homeowners who were underwater? Oh, taxpayers. So they stole money from taxpayers to bail out these idiots. See, contributed to a debt-based culture. Number 3, it costs people time and energy trying to optimize their taxes by deducting interest. That time and energy could be used for other productive purposes. There are literally accountants that this is all they do. What a waste of time. Think about all the other stuff they could do with their life. Anyway, if you're from another country, I can't talk, like I said, that most Americans will totally disagree with me. They actually think this is a good thing. This is why Americans are morons when it comes to math. But if you're a non-American, this is by far one of the most destructive policies you could implement. It is very destructive. You do not want the majority of your culture to be homeowners. Renters, there are many advantages to renters, and one of the many advantages to renters is that they can pack their stuff up and they can move. And what that means, this just happens in the economy. You're going to have shifting demographics. People tend to think in bubbles. Everybody, my friends, they're all moving to Nashville. I'll move to Nashville. That's not a reason to move to Nashville. You move to Nashville because there's jobs and it's sustainable, right? But that's how people think, and it gets into that animal spirits that Keynesian mentions, that people just do it because all their friends are doing it, and they don't even know why they're doing it anymore, and actually home ownership is a good example of that. So this is a mess. No, it is not a good financial move in the long run, and no, even deducting your taxes doesn't mean you're not paying any interest. You're still paying money to the bank. Overall, it's still a negative, not a positive.